inaugural edition of the Beyond Wealth Advisors Economic Outlook. I'm John Kliewer, partner and senior financial advisor. And with me, as always, Dennis Bacon, co-partners and chief investment officer. And this month, we're going to be talking about just some of the risks that we're seeing in the choppy waters of the economy. And we say choppy waters, and really since the beginning of the year, it's been that. And so maybe start there, kind of where are we at and what's that look like going forward?
Well, obviously, since we hit new all-time highs just a few days ago in several of the indicators, we've had upward trending, but we've had some downtimes. We've seen some things where we have some uncertainty for a few days. We expect that type of thing to continue. Right now, there are a lot of technical indicators that say that the markets are pretty stretched, particularly on the growth side of the market, not so much on the value side. Those traditional long old blue chip companies, those consumer staple goods, materials, energy, all of those things are not overvalued, but a lot of the other growth areas that we have come to know and love over the past year certainly are exceeding the valuations that we would typically think are good values.
Absolutely. So we know also a new administration in January starting to come out of COVID. So lots of things going on in the economy, but what are some of those maybe positive indicators that would give you some hope that maybe the choppiness is going to level out a little bit?
Well, a couple of things are, we're seeing interest rates rise. Now, if you're a bond owner, that's not a good thing. But the reality is we're seeing interest rates rise not because of what the Fed is doing, but because we're seeing the economy expand. As the economy expands, there's a presumption that interest rates are going to go up. And we're starting to see that. They've risen quite a bit in the last several months since the election. We expect that to continue. It may be fits and spurts between here and the end of the year, but it should be up more by the end of the year. The GDP currently, they're expecting to be somewhere around 4.5% for this year, which will get us pretty close to where we were before the pandemic hit a year ago. We're also starting to see some inflation kick up, which could be a positive. It might be viewed as a negative. Just kind of an anecdotal situation. I had a client call the other day and was telling me that his cost of wire for electrical use was up almost double from what it was 3 or 4 months ago. A lot of other raw materials like that are going up a lot right now, which presents some problems, but they're good problems because it's a lot of expansion and economic growth.
Yeah, absolutely. So with that, I know we can expect probably some continued volatility, those choppy waters, although we see some positive indicators. Probably still going to experience some volatility as we move through the summer.
Yeah, typically in typical years, you'll have 2 or 3 periods where you have a 5-6% pullback. I fully expect that to be the case this year. We've had one kind of pullback already, wasn't quite that much. I actually wouldn't be surprised to see a pullback of 15 to 20% at some point in time because the valuations on the growth side, but that will be picked up on the value side by all the opportunities over there. So it'll be more of a rotation of flows as opposed to an overall market drop. But I think that there could be a 15% drop this year. I wouldn't be surprised. Those happen about every 4 out of 5 years, so it's not that unusual either.
So it sounds like you just shifted a little bit from the economy to the market. So what are some of those strengths in the market? Maybe value being one of those. Expand that just a little bit.
Okay. Well, we're going to see a little bit more value. Those companies are starting to come back to life. We think of travel-oriented companies, companies that have to do with recreational activity. All of that's going much better. Last year we had no stadiums filled. In Texas they have stadiums that are filled this year. Some people like it, some people don't, but it's the reality of what's there. We're also seeing a pretty good comeback in the energy area, which took a big hit post-COVID. They took a big hit. That's coming back a lot. Base materials are coming back an awful lot. Silver, gold, copper, not so much gold, but silver and copper because they're industrial utilization. They're coming back. Small cap and international are typically things that come back real well at the front end of a recovery period. We're starting to see those come back. International is kind of questionable for some, but I do see it being a good area to be, a good, strong, maybe not overpowering the U.S., but a good, strong area in the future. I do see growth still remaining a player, but I think the stronger players are going to be in other quadrants other than the growth sectors.
We hear the word financials as an area that may have some strength as well. Explain that a little more. I don't know that everybody really understands when we say the financials are doing well. What does that mean, and what do you look at going forward?
Yeah, and financials, just so in broad terms, it's banks, it's insurance companies, both the life insurance type stuff that manage money, as well as the property and casualty insurance companies. Yeah. It covers all those. Those companies make money when they have a lot of cash, a lot of investments. Right. So as interest rates rise, they have a little bit more spread in what they can afford to make a little bit more money at. That's just a very simplistic way of putting it. But as interest rates rise, it gives them a little more flexibility and opportunity for growth. And there's a lot of cash in the sidelines right now at very low interest rates from the Federal Reserve, which gives them some opportunity to make a little bit more money. And so that gives us some opportunities there. But as the economy expands, people need money to have the economy expand. And that's where financials start making money.
Excellent, excellent. Yeah. All right. Well, in summary, what would you say to our viewers today looking forward?
I'd say expect the market to do well this year, but it's not going to be straight up. We're going to have a lot of volatility, and my advice is go enjoy some time on the beach, go out and have some fun this summer, enjoy some of those things you didn't get to do last year, and live life.
Yeah, fantastic. Well, thank you for joining us. Be sure to check us out on our other videos as well on our website, and we look forward to seeing you next month.